Here is crypto market news. Ether leaves Bitcoin behind with 2020 gain of over 100%. Ether, the second largest cryptocurrency by market value, has more than doubled in value this year, leaving Bitcoin, the crypto market leader, far behind. Ether is trading near $275 at press time, representing a nearly 114% gain on a year-to-date (YTD) basis, according to CoinDesk's Ether Price Index. The cryptocurrency clocked a 5-month high of $289 on Thursday despite increased exchange inflows. Ether's YTD rise is over 3 times bigger than Bitcoin's 34% 2020 rally. Bitcoin, the top cryptocurrency by market value, is currently trading around $9,550. Jahan Chu, co-founder and managing partner at Hong Kong-based trading firm Kinetic, told CoinDesk that Ether's price is surging on increased general interest and the network's popularity in the decentralized finance space. Ethereum's median transaction fee recently rose to its highest level since August 2018 due to a surge in transaction activity. Additional buying pressure for Ether looks to be stemming from the excitement surrounding the impending transition from the proof-of-work mechanism, aka mining, to proof-of-stake in the network's next big upgrade, dubbed Ethereum 2.0. Staking would allow investors to earn additional yield simply by holding Ether to support the operations on the blockchain. Glassnode data shows the number of addresses holding 32 ETH, the minimum balance needed to become a validator on Ethereum 2.0, has increased by more than 12% this year, suggesting increased investor interest in the novel form of income. While Bitcoin was expected to print solid gains following the May 12 miner reward halving event, the cryptocurrency has remained largely stuck in a range between $9,000 and $10,000. French officials moved to start trial of alleged BTCE operator Alexander Vinnik. French officials have officially started the ball rolling for the trial of Alexander Vinnik, the alleged operator of an exchange said to have laundered millions of dollars for criminals. French prosecutors filed a petition to start the lawsuit against Vinnik on Wednesday, according to a news report from L'Express. Vinnik was charged on the day he arrived in France in late January after being extradited from Greece. He stands accused of extortion, aggravated money laundering, conspiracy, and harming automatic data processing systems as the chief of the exchange BTCE, closed by law enforcement agencies in 2017. A hot wallet address for BTCE can be seen on Blockchain Explorers. The platform from Netherlands-based Crystal Blockchain shows that, while now empty, more than 733,000 Bitcoin, around $7 billion, has passed through the wallet. It has remained inactive since September 2017, a few months after Vinnik was detained by the Greek authorities. Once the French trial has concluded, Vinnik will be extradited to the US and then Russia to face similar charges there. Vinnik has maintained he is innocent of all charges. Carlos Ghosn's $600,000 Bitcoin escape fee paid via Coinbase. The son of former Renault and Nissan head and fugitive Carlos Ghosn used Coinbase to pay 2 men $600,000 in Bitcoin to get his father out of Japan last December. U.S. prosecutors said Wednesday that Anthony Ghosn sent 63 Bitcoin to Michael and Peter Taylor, a father and son team who smuggled Carlos Ghosn out of Japan on December 30, 2019. Coinbase gave evidence to Japanese investigators this week, see below, showing a series of transactions between January and May 2020 from MarketWrap. Bitcoin near $9,600 as gold hits high, Uniswap liquidity over $100 million as Bitcoin closes in on $9,600, gold surpasses $1,900 and DeFi liquidity steadily grows. Bitcoin BTC, trading around $9,592 as of 2000 Coordinated Universal Time, 4 p.m. EDT, slipping 0.03% over the previous 24 hours. Bitcoin's 24-hour range, $9,475 to $9,601 BTC above 10-day and 50-day moving averages, a bullish signal for market technicians. Gold is on the brink of an all-time high, up 0.80% Friday, at $1,901 per ounce. Sweden-based over-the-counter Bitcoin trader Henrik Kugelberg sees gold nearing its all-time high as a positive for the world's oldest cryptocurrency. Bitcoin will pass $20,000 in a surge. I suspect a new normal discounted Bitcoin price will be around $15,000 in 2021, like it has been around $9,000 in 2020. Bullish Bitcoin traders love to talk about gold, since they see similarities between the yellow metal and the cryptocurrency. I think we are just a couple weeks or months out from a strong continuation on Bitcoin as gold reaches $1,900 today, said William Purdy, a New York-based equity options and crypto trader. Indeed, gold's jump this week occurred as Bitcoin eked gains and the S&P 500 U.S. stock index performance was back to being flat for 2020. Kugelberg is pessimistic on stocks for the balance of 2020. I believe there will be at least a 30% drop in stocks on average at the latest in Q4. So where to go? To real assets with lasting value, said Kugelberg. He mentioned gold, Bitcoin and property as real assets. Bitcoin bulls have momentum on their side for now, said Alessandro Andreotti, an Italy-based over-the-counter Bitcoin trader. The crypto market is likely to be heading towards a bullish continuation from here. Within crypto, Ether is doing even better than Bitcoin this week. ETH BTC, that is, Ether priced in Bitcoin, has seen a jump in the past few days. Ether prices have increased almost 12% against Bitcoin, said Aaron Suduiko, head of research for cryptocurrency liquidity provider SFOX. It will be interesting to see whether any trends develop in the event that more DeFi projects continue to grow. Uniswap crosses $100 million in liquidity. The second largest cryptocurrency by market capitalization, Ether, ETH, was up Friday trading around $283 and climbing 3.6% in 24 hours as of 2000 Coordinated Universal Time, 4 o'clock p.m. EDT. The recent gains in Ether are due to the ongoing thematic chatter on social media around new DeFi projects that have been showing considerable strength, said Purdy, the equity options and crypto trader. Indeed, Uniswap, a decentralized exchange, DEX, for trading various DeFi project tokens, surpassed $100 million in liquidity Friday. Instead of order books, Uniswap uses liquidity pools that investors can stake cryptocurrency into and profit or yield from trading fees on the DEX. This liquidity is what enables Uniswap traders to quickly exchange between Ether and various Ethereum-based ERC-20 tokens, with total daily volume reaching $71 million per day, according to data aggregator Dune Analytics. Other markets' digital assets on the CoinDesk 20 are mostly red Friday. Notable winners as of 2000 Coordinated Universal Time, 4 o'clock p.m. EDT, NEM, plus 1.6% Tron, TRX, plus 1.2% Zcash, ZEC, plus 0.44%. Notable losers as of 2000 Coordinated Universal Time, 4 o'clock p.m. EDT, Chainlink, Link, 3.6% Cardano, ADA, 2% Monero, XMR, 2% Equities. In Asia, the Tokyo Stock Exchange is on holiday. Hong Kong's Hang Seng slipped 1.8% on News China demanded the closing of a U.S. consulate in Chengdu. In Europe, the FTSE 100 ended the day in the red 1.6% as the UK and the EU are still at an impasse on a Brexit trade deal. The U.S. S&P 500 index lost 0.80% as tensions with China dragged stocks lower, including Intel in the red 16%. Commodities, oil is up 0.40%. Price per barrel of West Texas Intermediate crude, $41.21. Treasuries, U.S. Treasury bonds were mixed Friday. Yields, which move in the opposite direction as price, were down most on the 2-year, in the red 4.3%. What sex workers want to do with Bitcoin? In this audio interview, CoinDesk's Lee Kuhn and OnlyFans performer Savannah Solo talk about fintech and the sex industry. From distribution platforms to Twitter and Bitcoin, she helps break down what sex workers really need from digital tools. Savannah Solo started her OnlyFans account in January 2020 and within a few months became one of the top earners on the platform in her category. She's never used Bitcoin before because she relies on platforms like OnlyFans and Cash App for regular banking services. She said some performers have been temporarily deplatformed or lost access to their funds, but she's been lucky so far. She often works a 16-hour day during these first few months of building her business. The market got super saturated during quarantine. They OnlyFans performers were having trouble getting any subscribers at all, Solo said. In my first month, in January, I only made $80. There's a common misconception that sex workers are now making much more money than before the coronavirus crisis. Both Solo and fellow sex worker Honey Lee agreed the brief flurry of new customers settled down in the spring and that summer has been a particularly slow season. Nobody is saying they are making more because of the pandemic, Lee said. There's a lot more new models. As for the blue-collar guys that tip you, a lot of them have lost their jobs. Lee prefers the camming site Chaturbate, instead of OnlyFans. Chaturbate charges performers nearly half of their earnings to use the site, much higher than the 20% charge from OnlyFans. But Chaturbate offers a feature that Lee prefers. Customers can pay in cryptocurrency and performers can cash out in Bitcoin. The site still acts as a middleman, but at least Lee can choose her currency. My customer base is mostly American, so there are instances where Bitcoin is more useful for me, especially when I am traveling, said Lee, who is based in Europe. Bitcoin tippers. Lee said some Chaturbate performers, like her, take a fraction of their earnings in Bitcoin if they make extra that month. This is regardless of whether the customer paid in Bitcoin, since the payment is to the platform anyway. In addition to cashing out from the performance platform in Bitcoin, Lee also uses personal wallets to accept money directly from fans. Over the past year, 4 clients tipped her in Bitcoin. Yet that minority can have a large impact. Customers that give money directly tend to be regulars, really big fans. 5% of my customers make up 90% of my income, Lee said. There's not a lot of people that accept Bitcoin from clients directly, but I do know some Findemies, financial dominatrix, who do. For a birthday gift, for example, it'll be like, cool, here's my wallet. Solo said she hasn't been offered Bitcoin yet. She's still trying to manage some of the technical basics of running her own business. The platforms do extremely little work to help you out, Solo said. There is no tech support. Tech support. There are a variety of tech-savvy sex workers creating their own Bitcoin-friendly platforms and teaching each other how to use various technologies. For example, an escort booking consultant named Joe, who has been helping sex workers garner and screen clients for 2 years, said a few women paid her in 2019 to help them use Bitcoin. The Bitcoin advertising campaign lasted for a few months, on a website that only accepts Bitcoin. This is generally uncommon. Joe said it was a hassle. I think a lot of girls in this industry want to protect their identity. However, Bitcoin is not the most user-friendly thing, Joe said about the returns for time spent using Bitcoin. It was pretty dead for a while. Bookings. Business has come back, but it's slower than usual. Solo also noticed the imbalance of supply and demand this summer across the sex industry. She said she usually turns to other performers for tech support and doesn't know of other consulting options for sex workers. Performers like her generally rely on platforms like Twitter, Instagram, OnlyFans and Chaturbate to advertise their brands. Converting casual tippers into direct customers is the hardest part of the business. Until they do, performers like Solo struggle to deal with refund issues like chargebacks. That's a huge issue, Solo said about chargebacks. People send sex workers money, then the person can call their bank, have it back charged, and all of the money comes out of the sex worker's account. That's such a nightmare and it happens all the time, she added. People get free service out of that and it's super gross. CoinDesk's Twitter hack proved the media can't rely on Web 2.0. A rundown from one of CoinDesk's editorial Slack channels during an action-packed hour on Wednesday last week reads like a high-paced drama. It tells the tale of a news team going through a process of incremental information discovery. First, there's the realization that a big story, a massive hack on Twitter, is developing. Second, there's the sudden comprehension that CoinDesk itself has been targeted in that attack. And third, there's the scramble, with limited options and a certain sense of helplessness, to keep social media channels open to get that story out. It's a tale, also, of how media and information services like ours have developed an unhealthy dependency on centralized social media platforms over which they have very little control. A growing story now that CoinDesk's Twitter handle has finally, 1 week later, been restored. We think it would be helpful to include a truncated summary of that Slack conversation. This episode is, after all, a cautionary one. At 3:21 p.m. Eastern Daylight Saving Time on Wednesday, July 15, reporter Danny Nelson shared a screenshot of 2 side-by-side tweets. One from Binance's account saying we have partnered with Crypto Health and are giving back 5,000 BTC to the community. The other from Binance CEO Changpeng Zhao telling people not to click on the link and asking them to report the Binance account to Twitter admin. Someone been hacked by the looks of it, Danny Riley observed. If CZ was hacked, this is some 3D chess. From there, CoinDesk's editorial team sprung into action, figuring out how to cover the story. 2 minutes later, reporter Nikhilesh De chimed in, apparently Gemini also got hacked. Soon after, reporter Zach Bull noted that at Angelo BTC, a well-known Bitcoin trader's account, was also posting the same tweet. Something odd was up. From then on, the transcript shows a sense of urgency. Colorful expressions of amazement and expletives fill the flow, as editorial instructions are meted out and journalists add to the list of hacked names from the crypto community, Coinbase, KuCoin, and on. At 3:45 p.m., as it dawned on the team that this was something central to Twitter, rather than isolated to individual accounts, reporters David Pan and Nikhilesh De chimed in simultaneously with links to a bombshell tweet. At CoinDesk was tweeting out the same cursed message. De proactively tweeted a message from the CoinDesk account via TweetDeck, to which he still had access, warning people to ignore the hacker's message. Meanwhile, CoinDesk's head of tech and product, Parker Ferguson, spun up a separate Slack channel for editors and tech support to figure out how to address the CoinDesk outage problem. Then, at 4:20 p.m., with two teams now scrambling to tackle both the writing and technical needs, reporter Benjamin Powers weighed in with and shared a tweet from Elon Musk's account. The attack had leapt outside of the crypto community. It would soon grow to encompass the accounts of Apple, Joe Biden, Barack Obama and more than 100 others. The lesson is that news organizations like ours, as important as ever in providing trusted information, are overly dependent on the behemoths of the Web 2.0 era. Reporters and editors shared ideas on how to attack such a big story. But CoinDesk's Twitter management problems were about to get worse. At 4:39 p.m., De weighed in again to the Slack channel. I just lost TweetDeck access at channel, he wrote, quickly adding, and social flow. Not only could the team not delete the offending tweet from the hackers, they could no longer put information out on the @CoinDesk feed. Who knew what else might be hit? Was Twitter protectively shutting down access to its API, or did the hackers now have complete control of all our tools? I guess the only good news is that it's not just us, posted podcast editor Adam B. Levine. So they Twitter have to fix it. But until then we're passengers on this ride a long wait through the evening until after midnight. Reporters and editors scrambled to get out articles based on this big, multifaceted story. While members of the editorial and tech teams coordinate outreach to Twitter and to come up with jury-rigged solutions to keep an open channel to our Twitter audience. The decision was made to shift all tweets to a separate CoinDesk account, at CoinDesk Markets, and just hope it wouldn't be taken down. That account, which has less than a 20th of the followers tracking the main @CoinDesk account, became our core Twitter publishing vehicle for the next 7 days. A waiting period then ensued. Other accounts had their access restored, but @CoinDesk was delayed. It wasn't until Wednesday this week that we learned why. @CoinDesk was among 36 of the total 130 hacked accounts that had their direct messages accessed. Finally, on Thursday, after much wrangling with Twitter administration, CoinDesk's access to its account was restored. A look at the DMs suggested all was in order. The DMs from the account are not used very often, either by CoinDesk editors or outside users. Lessons learned. So ended a frustrating experience. CoinDesk doesn't always have the most pleasant experience with members of crypto Twitter, but the platform is where crypto and blockchain communities live. To be cut off from our audience, our lifeblood, was to have our mission interrupted. What's more, there was an awkward duality to the situation. As any journalist will tell you, media organizations want to report the news, they don't want to be the news. When that happens, you must put on both hats, managing both the problem at hand and the coverage of it. The lesson is that news organizations like ours, as important as ever in providing trusted information, are overly dependent on the behemoths of the Web 2.0 era, Facebook, Twitter, Instagram and YouTube. CoinDesk's experience of the Twitter hack gives weight to an argument that runs strong in the crypto community, especially among those working on so-called Web 3.0 solutions. That is to say, a decentralized model in which users retain control and ownership of their highly valuable data and content in theory would be less vulnerable to these kinds of hacks and give power to those who create the valuable content and communities in these networks. There are challenges to achieving this vision, whether users should or want to be responsible for securing their data. For example, and whether it's possible for a decentralized platform to create sufficient network effects or economies of scale to attract enough users away from the big communities on Twitter, Facebook and Google. But events like this are a reminder of why developers need to keep working to overcome those challenges. The world needs a better, fairer, more distributed, less vulnerable information system. Could the European Recovery Plan actually break Europe apart? The EU's Recovery Plan agreement has been widely hailed, but some argue that it is taking Europe down a dangerous path. Today on The Brief, which industries are recovering the best? China retaliates against U.S. after consulate shutdown. Dollar heads toward its worst month since 2018. Our main discussion features returning guest Tuomas Malinen, CEO of GNS Economics. In this discussion, Tuomas and NLW discuss an outline of the European Union's new recovery plan, the new debt issuance structure that marks a first for Europe, the challenges of currency unions, how Europe's debt crisis changed how Europeans think about economic integration, why the current plan amounts to stealth federalization, why some member states are in a state of mutiny over the fund.